Mortgage rates are difficult to predict, even in the calmest of economic periods. Mortgage markets, however, have been particularly volatile in the erratic economy of the post-pandemic period. Nonetheless, 2020 and 2021 were fantastic years for homeowners and refinancers, with nationwide mortgage rates almost at record lows. The question on everyone's mind as 2023 got underway is, what would the coming year bring? Well, stick around because today we'll answer this question. Mortgage rates were among the lowest we had seen in more than 3 years in 2020. They turned out to be better than anyone could have imagined or predicted. Both the number of homes being built and the housing market remained robust. 2020 offered several excellent possibilities for cheap rates on a range of loan programs for people looking to buy or refinance. The number of refinances increased during the year as a result of the low rates. Some consumers were successful in getting their current mortgage loan rate reduced by up to 2 to 3%. 2021 set new records for the mortgage market, with some of the lowest mortgage rates in years. For homeowners, it was the ideal year to find their ideal home or even to refinance their existing one. The years 2020 and 2021 will be remembered as having the lowest average mortgage interest rates ever. Although rates dropped, we started to see the drop of housing inventory towards the end of 2021, which made it a struggle for homebuyers to find their dream home. Mortgage rates began to rise progressively around the start of 2022 as the housing supply began to tighten. Everyone was wondering when we would see a turnaround as you started to notice fewer homes on the market. Many forecasts were being made and nobody knew exactly how the upcoming few years would pan out. For any house buyer, 2022 was a difficult year. Some of the top real estate economists in the country predicted that mortgage rates will drop this year as inflation declines and the U.S. economy gears itself for the potential of a mild recession. This comes after 2022 saw record-breaking annual increases in mortgage rates. Homeowners who were priced out last year may reconsider their options due to mortgage rates that are relatively low. Experts predict that housing affordability will continue to be a major challenge. Although increased borrowing costs have reduced demand for home purchases, a persistent supply shortfall is keeping housing prices high. Although, while the housing inventory is predicted to increase in the upcoming months, it is still far below pre-pandemic levels. Here is the forecast for the mortgage rates in 2023. According to Fannie Mae's most recent monthly housing forecast, the typical 30-year fixed rate will drop from 6.5% in the first quarter of 2023 to a flat 6% by the end of the year. The most recent quarterly forecast from Freddie Mac, which was published in October 2022, closely matches those from Fannie Mae. In 2023, the mortgage juggernaut projects that the 30-year mortgage rate will range between 6.6% and 6.2%, with an average annualized rate of 6.4%. The 30-year fixed mortgage rate is predicted by MBA's December 2022 mortgage finance forecast to be 6.2% in the first quarter of 2023, and to progressively decrease to 5.2% by year's end. The 30-year fixed mortgage rate is predicted by MBA's December 2022 mortgage finance forecast to be 6.2% in the first quarter of 2023 and to decrease progressively to 5.2% by year's end. According to the brokerage's 2023 housing forecast, Redfin anticipates that the 30-year fixed rate would decrease throughout the year, concluding the fourth quarter at about 5.8%. All things considered, this year's average homebuyer's rate would be roughly 6.1%. According to Taylor Marr, Redfin's deputy chief economist, rates are currently trending farther downward than initially anticipated and may fall below 6% by the end of the first quarter as a result of recent statistics showing a sluggish job market and cooling inflation. According to forecasters, mortgage rates will rise at the start of the year and then decline by year's end. That's due to the widespread belief that inflation has peaked as the Federal Reserve slows the pace of its benchmark rate hikes. The rate hikes aren't the only tool the central bank has been leaning on to fight inflation. In addition, the Fed started selling treasury bonds and mortgage-backed securities last year in order to shrink the size of balance sheets, which increased the pressure on mortgage rates in 2022 even further. While a record climb in the 30-year fixed rate last year does not guarantee a down in mortgage rates in 2023, it's been met with signs of economic reversal. Inflation data will have a significant impact on the Fed's monetary policy this year. Yet, if inflation rears its ugly head, the Fed may once more tighten monetary policy, which might raise mortgage rates. With that, we'll wind up the mortgage rates forecast for 2023. Let us know what you think about mortgage rates forecast 2023 in the comments section below. If you find the video interesting, press the like button and go subscribe to our channel to watch more interesting videos like this in the future. Goodbye.